Hello, folks. Welcome to the State of the Market. I'm David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. I'm going to start out with a few quick disclosures, as always. We'll put a few more in the comments. Remember, we look at ETFs in this for kind of indexing purposes, and they're not any kind of trade recommendations or anything of the sort. We use them to look at performance and levels for sectors and themes in the market. And we continue to see rotation between those. There are some ETF disclosures if you want to see those. All right. Now we also show the standardized returns of these same ETFs right here. Interesting sort of situation now as we kind of get into December and the market starts to kind of get farther away from the reelection of Donald Trump and the kind of impact that that had on sentiment. So I want to just actually start off by looking at some of these performances here because something kind of jumped out to me. This allows us to look and see which sectors are doing best and worst in the last month. We can see consumer discretionaries doing well, and that's mega caps, Tesla and Amazon really driving that. We see communications doing really well. Things like Netflix been on a tear, Meta, those have been driving communications. But then what's also interesting here is consumer staples are starting to outperform in the last week or two. See, consumer staples was in the last, it was somewhere here, but it was the fact it's outperforming in the last month is actually something that's kind of noteworthy to me. And I want to kind of mention that because one of the things that we could be kind of seeing here is look on the last month. Look at who's doing. We have materials doing poorly. Energy we've talked about, but as you start looking in the last week or so, we start to really see financials and industrials sliding down the rankings. Things like small caps that we're going to get to, kind of just sliding. And so I wanted to kind of point that out because we could be at a spot here where we're starting to see a fade of the cyclical theme and a return of the large cap growth theme. I think that's an important thing. If you look last week's Institute for Supply Management reports, they were neither of them were that great. Services missed for the first time, and there was only a modest increase in new orders from manufacturing on the manufacturing report. So these things are not really giving massive confirmation so far of the cyclical side of things. What's also interesting is that this is the GDP now, and it's been shooting up to this very high level. But the question now is does it really stay up there? When you look at this thing historically over time, I've often seen that when it gets to a point when you think, wow, this is amazing, it just reverses back down toward the consensus. So I think we're at a spot here where we just have to kind of see that the cyclical parts of the market had this big kind of Trump bump, so to speak. But that is now a month ago. The values, the financials, the banks, the small cap, the industrials, all of those, and now some of them are not showing as much sort of overall strength. Also today, Citi came out with a report. Now, I don't know what to make of this, and I mean, this is not something that you put too much stock in, but it's something to think about. They did an analysis of personal tax returns, and they said that about 700,000 Americans lost their jobs last year despite this payroll growth. So the fact is that there's been this kind of debate, how good is the data and everything like that. But it was an interesting insight from Citi. I wanted to kind of share that. All right, now I also think it's important when we talk about the industrial stocks. So don't forget. Let me just quickly start off by looking at the weekly of the XLI. But this is something where we had this vast stimulus in industrial stocks under Biden, and then we had this big jump, after Trump's election. But now the thing is these are now, they're not following through with this kind of tight strength we saw at other times when they were rallying with nice tight uptrends. This is getting kind of much sloppier, and it's also pulling back much more quickly than it did before. If you look at this trend here, it's going up for like a few weeks and coming right back down to the trend. When this was in stronger shape, it didn't do that so much. So I think this is just something to kind of think about here. The industrials have priced in a lot of growth. And again, buy the rumor, sell the news. Just realize Trump coming in, when he actually comes to office, there could be a lot of questions of, oh yeah, how much will this really be? And how much of an impact and all that other stuff. And it's not just a pick on the politics, but just to remember that we already had a great deal of stimulus under Biden of the factory sector a few years ago. I can't believe a couple of years ago we were talking about the massive runaway growth in the building of construction of factories, and now that is slowed. But so the thing is, remember, is there's a lot that has happened, and you always have to be careful when something is assumed. Everyone's like, oh, of course we're going to have this great renaissance in manufacturing, and of course it's going to happen, and blah, blah, blah. And these things are trading at high multiples. It doesn't leave a lot of room for error. And I think that's kind of a thing to mention. Another thing I want to mention, just very briefly, is the transportation index, which we don't talk about that much. I mean, it's kind of lost relevance, but it's really also kind of failing to do very much in terms of holding. If you look back on the daily of this, it was the election, and it's just kind of not really showing any kind of real, confirmed breakout. And so, I mean, it's still below where it was back in 2021. So all these things to me say that we're at a spot here where we might be kind of vulnerable to the cyclicals kind of petering out, but it could be back to our old friend, technology. That could be where we kind of see things. So let me just kind of get to that, because some of the things in technology are potentially kind of giving a sense that there could actually be some acceleration in that group. So here, essentially, the S&P, just kind of already kind of trying to just hold drifts in the range from last week. The levels that immediately grabbed my attention were really on the daily chart of the S&P, which is basically you had a low around 60.60 from right back there. It was, I think, Wednesday of last week, and we're going down and more or less trying to hold that. And from my perspective here, this is something where this could be something where people look for kind of holding essentially this range between around 60.50 and 60.60. Just see if it holds the 10-day moving average coming up, and then looking for potential continuation in this. Recently hit a new all-time high on Friday, so we're still close to the highs and everything, and there's nothing giving much sense of this reversing downward yet. Also interesting that we saw a lot of upward price targets. From Oppenheimer, they went to 7,100 next year. I think the first above 7,000 I've seen. SocGen went to 67.50. Also, I don't have it on this chart, but the RSI went overbought on the S&P daily chart last week for the first time since July. And in my view, I tend to think that when things hit overbought, that's a signal that you see more strength. So that's just kind of something to look at. I think I actually can put RSI on. Let me just put it on here. Let's see. RSI, put on the S&P. But you can see here that basically, wait a second. That was some other drawing I did. Let me take that off. Wait a second. I had the wrong indicator on here. RS, relative strength index. That's what we want. Let me take this one off. But here, this is some other drawing I done on this chart. But the key thing is S&P here. You can see RSI went above 70 last week, and when RSI goes above 70, it tends to get up there, and then it has more overbought conditions, which means tight strength, and that's consistent with what we kind of said of looking where you hold 60.50 to 60.60 area. All right, now looking at the Qs on the weekly here. Also, just essentially, this was very interesting. What this is that basically it closed at a new high for the first time. Well, back here during the election, pulled back, and now it held. But we have to remember that the Qs were not really doing much all summer. And so from my perspective here, year end through the next, even maybe all the way through the next earnings season, I think it's just important to remember here that this is just now starting to break out. The NASDAQ is just now starting to break out, and it's being driven by Apple, strength in Microsoft, and things like that. And at the same time, NVIDIA, kind of just, sucking wind. But the thing is that, if you look at this, I mean, people could say it's holding the 50-day moving average. It held the low from late October. And the question is, if NVIDIA does continue higher, what does that do to the overall, NASDAQ? So we could be at a spot here where it's simply a rotation away from the small caps, financials, industrials, cyclicals, back toward, growth and large cap growth. It's kind of what, some of the sort of price action may be suggesting here. Now, that would also be not terrific for the Dow, which is also kind of, did you get this surge and then it's just kind of drifting and languishing. And charts like this can be tricky because they can just kind of bleed and drift. And you have to look for where would, kind of levels be that people might target. And, we have this kind of high from back here. But the thing is, if we get below that, I mean, people might be looking back here to this weekly low, to the weekly close, and also the place where we opened up after the election here, where we basically slammed down after the election, opened, probe lower, and then rallied. But basically, I think we might just kind of realize that there could be some space down here if we fail to hold this level. So right now, with what we said about the cyclicals and everything else, that's generally kind of more consistent with the Dow here. A lot of financials, a lot of industrials. Now the Russell is the one that's looking kind of most troublesome. The Russell might just turn into another like rug pull head fake. We've been talking about how Russell's kind of like, the old Peanuts Lucy with the football with Charlie Brown, always tries to kick it, always gets pulled away. And basically here we might have, a longer term double top. And I think this is something now that, we have to just this and put this here. We have to just be careful and realize that this has not broken out, and now we're making lower highs. We're not holding. If you look at the Russell here on the daily, you look at all these big solid. Oops, look at all these big solid candles on the Russell. I mean, look at this. It's like opens high. Most of these days, very seldom did it close above its open. I mean, it opened and it closed lower. So even here, like this is not consistent with like strength. This is consistent with kind of weakening momentum. And so I wanted to point this out. Also, we have an inside day and then a bearish outside day. So this is something here that is not maybe terrific for the Russell. So wanted to mention that because of that double top there, this could be something where people kind of look for, some potential breaking back down and filling into this space. And if there is going to be a sell the news, sort of trade on Trump, a kind of sell the Trump trade, the small caps might be the most logical place where people look. Now, TNX, 10-year Treasury yield, this is now just kind of drifting here in this sort of range. I think to me, we have the Fed meeting later this month. We have CPI coming. I'm sorry, which day is CPI? CPI is on Wednesday morning. So those are just kind of potential catalysts for this. And, from my view here, the thing that kind of, was to me kind of most troublesome about this, if you look at this on a weekly, if you actually make this into a channel, I mean, I'm just continuing to watch it because I don't really know what to make of this overall. I mean, I'm not an expert on treasuries, but there is a part of me that thinks the yields, could go over 5%. And the reason I say that is it didn't reach the bottom of the channel here. It kind of had this false breakdown and things. So I'm wary here of yields moving higher, and I think that that remains one of those risks that could come out of the woodwork and hit us. So I think we have to be careful here if the 10-year makes a higher low here and kind of holds, because this is above 4%. And that's a nice psychological number. We had this level also down here right above 4%, where it was a high and it became a low, and we surged when we got above it. So we could still be seeing some things turning here on the 10-year that are, potentially, pointing to higher rates. I'm not sure the exact impact that would have on the S&P 500, but I think you just realize here is that this is maybe giving some signs here that we could see still rates moving higher, and this trend line, you wouldn't expect to break it right away. But if we come back up to it quickly here without even retracing back down to 4%, that could be, something that kind of weighs on things. Now, let me see, that was the 10-year. So look at materials here. This is now trying to hold this kind of weak trend line that's coming up, and it's turning into something like a false breakout. Today we have a little bit of a surge because China announced some stimulus, but the situation here in materials is not looking great. And again, this is part of the cyclical thing. So people might want to just realize here that this could be something that could have some potential for breaking this trend line to the downside. And I think this is actually, of all the things I'm looking at, this might be, a trade that maybe has the most kind of clear setup, this kind of potential trend line break in the XLB. Look at it on the daily. You can also see essentially, has this lower high and it comes back down and tests. So this is going to be interesting to see kind of what happens here on materials. This would be consistent with financials, industrials struggling. There may be more of a canary in the coal mine, but to me, I wanted to mention this because this is starting to look like a false breakout, failed breakout. Communications remain an extremely strong situation here. We can move up this support level, and I think here we have to just kind of realize that this is run a lot, and people might simply look for a test of this level, which was the high 2 weeks ago and the low last week around 98.4, 98.40. That might be essentially kind of our level there on the on their communications. Again, might simply form an inside week, kind of sit and then continue a little bit later. I think it's important to realize also, I don't know if I have time to go back to this, but when Trump got elected in 2016, the Russell rallied really hard, and then as soon as January came around, people just started buying mega cap growth stocks. So I think there is some precedent for this happening before. Now, in energy has this pop today. I have to say, I really don't understand why the regime change or whatever it is in Syria is bullish for energy. I think that's crazy. If anything, it seems to me more likely that the result of the situation in Syria will be less conflict, and that to me is something that is more likely to be bearish for energy. So I want to just kind of say there is this Chinese stimulus that's giving a boost to energy today, but energy remains in a very kind of not favorable setup if you want to be long. Essentially, these lower highs, this range, and we also have on this one this rising trend line. We've talked a lot about the the kind of challenges in energy. A lot of people have, and I think when you look at things, Trump coming in. I mean, one thing I think that we know, most people believe that Trump will do in one way or another is basically allow more oil and gas drilling and things like that. So all those things together, right here, for energy, suggests that this could be something also where we're looking for XLE to go back toward 85 potentially. So here we have the same thing here with financials, where very little kind of like bounce on this last week, and now here it is trying to hold the level from here. I think we also have to realize now that while technically, it is essentially holding some relatively recent lows. This has run a lot, and getting into the end of the year and everything else, it might be simply an area where it's starting to pull back, and it could pull back a lot more. There's a lot of places you can draw lines and say that it should have support. And so I think at this point, people might need to see a period of several weeks of kind of downside to sideways movement before we have confidence in the financials again. We have a nice kind of space and time before they necessarily make much sense, and they often rally after earnings, so they might be in a dead zone here through kind of early February at this point. Now, industrials also, another one of these rising trend lines on these cyclicals. They all kind of look like wounded animals here, to be honest. I think I just realized here that looks kind of like what we saw with materials. I did show that on an XLE. I did that one earlier. All right, so XLK, interesting how, now look at this one. This one has bounced off that trend line. And what's interesting to me about XLK is it's above the old high, and it's sitting here. Look at Apple, for example, on the daily. Look at Microsoft has now been kind of accelerating. It kind of broke out of, what could be viewed as some kind of, negative sort of setups there. So from my view here, and then the other thing I'm sorry is NVIDIA, but NVIDIA also, basically holding the 50-day moving average. And look here at these levels from where it was back over the summer. I mean, it's not exploding higher, but it also is not going back under its old highs. I mean, it's trying to hold these levels here. So from my perspective here, when we look at it, where it's interesting when you actually realize, go back to our TradeStation platform and look like, for example, on the 3-month performance, we can actually see that technology has not done very well. Technology, well, it's actually done a little better than I thought. Maybe, something like the 1 month, or even you can see where the strength that I'm trying to say is the strength has been in consumer discretionaries, Tesla, Amazon, and it's been in communications like Meta and Netflix and some of those names. It has not really been in the XLK. Look at a year to date. XLK was leading earlier in the year. Now it's no longer leading the S&P. Now financials are. Look at consumer discretionaries. There was a time when they were lagging badly. So from my perspective here, this might be something where people simply look for some potential catch-up. Things like Apple, potentially here, NVIDIA, Microsoft, the really big names. Those names are areas where if you look at them, people might actually see them as having some potential. So I want to just mention here about the XLK. This close above the old high. We've seen this pattern before, and it has often been followed by further upside. So seeing this breakout at the same time, industrials, materials, financials kind of languish and sit, could also suggest that sort of shift. Last week, if you look at the S&P, I think it was something like under 200 members of the S&P rose last week. So when breadth narrows and the strength is in large caps, that is a theme, and that seems to be playing out. So this rotation towards small caps and that entire narrative, there's evidence that it's not really still in effect. Now, XLP, consumer discretionary, consumer staples, I have to say, when we look at this, it has broken its trend line. It is holding these weekly lows, and consumer staples might not be a very interesting or exciting part of the market, but this is something where people might actually be looking for, something of a breakout now. It's back above that old high, and this might be something where people look for some strength in the coming weeks and months, especially if I'm right or not right, but at least the thing I said about GDP now, I mean, say, for example, going forward, there's more of a sense of weaker economic growth and things like that, then things like consumer staples would potentially work in that environment. Now, real estate remains in this kind of drifting zone here, and again, this is going to be something where I think we need to really see, does this turn into a kind of slow meandering top with more downside? And it really could, because if you look at this, these are all, I mean, this basically, look where it was, a few years ago. It has failed to break out. It's the worst of all the major sectors. It's the only major sector that has not made a new all-time high in the last few months. So I'm sorry, energy is not. I should correct that. Energy remains also, but that's, like we've said, not looking super bullish. But if you even look where XLRE was, real estate, where was it versus the previously in the in this decade, and kind of in this longer term market environment, real estate remains below its previous highs. So I think this is something where if we have any kind of sense of rates moving higher, or people want to just sell stuff, this is an area where it is longer term weak, and now it's going sideways for a long time, which might turn into something of just a period that gets confirmed as resistance. So I think we want to just watch this and realize that this is one now that it might have some good downside if the market wants to drop. Usually people say, oh, REITs will do well in a recession, but it might not be the case. Now, utilities, kind of just sloppily chopping along. They, from my view here, this is something where the 78 level is what, people will be watching. And this, these guys ran a lot. So this might be a period here of kind of testing 78 several times. I think it might be something people just kind of want to think about doing and wait for more clarity on rates. Maybe we need to get by CPI or get by the Fed meeting later this month. But, this is one here where I think 78 remains the level to watch. Healthcare here remains in this apparent downtrend, and people might want to actually be looking now at this point for more of a test down toward this low from, when was this, back in April. This level now, there's a lot of areas down here around 138 on healthcare. You can look at, all the way across here. So people might actually be looking for this now to kind of push lower. I was looking at Eli Lilly recently, and I gotta say, I mean, this chart, I don't have the 200-day moving average on this. Actually, wait, I can turn it on. Look, Eli Lilly's about to have a death cross. So, um, turn on CNBC in a week and they'll say Eli Lilly has a death cross. Just kind of funny. But look, I mean, this is a name that has been, a real monster for a long time. It got close to $1 trillion market cap, and now here it is with this gap on earnings. I mean, very high multiple on this name. This is something that people might be kind of wary of. I mean, this is, the idea of this turning into a major correction or something. I mean, that might not be something people really expect, but it's more a question of the fact that this now has a spot where a gap lower, it's near this kind of resistance zone. It trades a lot of options. So people looking for downside might actually be looking for some, kind of push lower in this name. But anyway, the situation in healthcare remains kind of problematic for a while, especially with Trump coming in and stuff. And I'm not sure what's going to happen with RFK Jr. I mean, that would actually be a big trigger if he gets confirmed. I'm not sure what his situation is, but I think that's maybe one of the things to watch with this, depending on how it plays out politically. Consumer discretionaries have been, on really an explosive run here. And this is sort of thing when, people probably are just, for something like this, people are going to look probably just for, some modest weakness, looking for being down, a few days, or a movement kind of like this, looking for a period of time when maybe it catches up with the 10-day moving average or the 8-day exponential. But, Tesla's essentially here breaking out. Amazon's breaking out. Well, I'm not sure Tesla is exactly breaking out, but it's pretty close to it. I mean, it's back where it was in its old high. And this is something where people might Yeah, it's not broken. I should say that, but basically, it's challenging these highs, and people might be looking for some degree of consolidation, but at the same time, I think we have to realize that this is a very strong momentum, and with the two leaders, Amazon, which announced some AI tools last week, it was an interesting sort of thing. Amazon is, apparently really delivering now on some of the, its earnings were good, and on top of that, now they have more AI stuff hanging out. There's more AI stuff starting to trickle out again. That theme seems to be coming back, which also would kind of fit into the overall kind of large growth name. So from my perspective here, the consumer discretionaries are something that people will simply watch and look for modest weakness for potential entries. Well, the S&P is literally, let's just look at it here on this chart. It's done like nothing since we spoke, since we started. It's just kind of sitting here. But as they say, never short a dull market. I do think that we're in a situation where um, the market has run a lot, but the VIX at this point has. Let's just take a look at the VIX because it essentially it can go into periods of being low and then just sit there for a long time. And so I think, at this point, the most important thing is the VIX is just essentially in a downtrend, and there's really nothing all that kind of. I'm trying to really, think CPI. I don't think anyone really cares that much at this point about CPI or even exactly what the Fed is going to say or do. It's all about the idea of we know that essentially at this point in time, Trump is going to come in next year. He's going to do something with tariffs, something with probably healthcare things, something with industrial, something with tax cuts. We don't really know sort of how much, and that's just kind of out there. Meanwhile, you take a step back, and there's still a huge amount of money on the sidelines, and there's nothing right now that really has a clear sort of problem in terms of things like we're not seeing the yen screaming higher. We're not seeing credit spreads blowing up. There's nothing that really could give a sense of something really negative taking hold at this time. I think the main thing we want to continue to watch is to see if the yield in the 10-year does actually try and make a run up toward these highs. And I think that's the main risk that remains, from my view, in the market, is to see what happens with yields. But I think right now, we have seen this sort of shift back to the large cap growth. We've seen Apple break out to new highs. And the other thing is, I want to just point out in the communication side is that we have this pullback, saying Meta, kind of interesting. Also, if you just look at this, it's on the daily. Look at how it's just holding these lows. This low, basically the lows from Wednesday of last week were the area where people are interested. See, it's just holding these lows. But the other name was interesting to me, was just Alphabet. I mean, here you have a name that had good earnings. They had this antitrust thing. I don't know if it's very clear yet what Trump is going to do with the antitrust thing. But again, same sort of thing. Is this maybe a name where people say, wow, there's a lot of negativity in a name like this, but they had good earnings, and someone's coming into office who maybe is not going to be, maybe is anti-business or whatever. Maybe he is going to be more, not really crack down or whatever it is. But the thing is that right now you have a company that's in a strong sector, that had strong earnings, that has a lot of negativity from the not geopolitical, the regulatory political sort of side of it. So I think, again, also Nvidia, they got hit with that thing from China potentially cracking down on them. So again, we're in a situation where a lot of these things are now, they've taken some political risk, and at this, they've taken some fear has now been priced in, and that actually can mean we're in a spot where potentially people say, wait a second, that's not necessarily the case, or things are maybe more positive. So when things have a lot of that negativity priced in, or once it's already known, often the pendulum can swing the other way. The same way there's a lot of optimism priced in for financials, industrial, small caps, and if the pendulum swings the other way, then that's what we have. So that's more or less, how I see things now. We're going to be back with market trends on Friday. Hope everyone has a great day. I'm not on Friday, on Thursday at 2 p.m. Eastern, and hope everyone has a great day. And I'll see you on Thursday. Take care.